So we're going to take a look now at some more budgets. We've got sales, production, purchases and labour. Production and labour budgets have come up in previous sittings of the exam, but I don't think sales and purchases have appeared, only in as far as they've cropped up in cash budget. So the sales budget and the purchase budget themselves haven't. So what I'm going to do now is just take you through the layout, take you through the purpose of each of the budgets, how to calculate the figures, and also explain how these budgets are linked together. So we've got a scenario here. Budget Limited, you're employed as a trainee accountant for Budget Limited. It's a UK company that produces 50-litre mini shopping trolleys for retailers throughout the UK and Europe. So you know the kind of thing in a convenience store where space is limited, these little small trolleys that you can't fit too much in. They're currently preparing budgets for the first quarter of 2024, and the sales director has provided the following information. Last year's sales totaled 56,400 trolleys and their total revenue was £5,019,600. The company has just secured a contract with a large chain of convenience stores which will increase the volume of sales by 20% in January 2024 and 2% per month thereafter. To achieve this growth, the selling price has been reduced by £5 per trolley. What we're told as well is that sales accrue evenly throughout the year, and we are required to prepare the monthly sales budget for January to March 2024. So because it's monthly, we need to do a separate budget for each of the 3 months. So the starting point for this is going to be what happened last year. So we sold 56,400 trolleys, and it tells us that sales accrue evenly throughout the year. So if we divide that by 12, that will tell us how many trolleys we've managed to sell in 1 month. So it's 56,400 divided by 12 is 4,700 trolleys a month. And we've got the total revenue here was 5,019,600. So 5,019,600. If we divide that by the 56,400 trolleys, it tells us that they were sold at a price of £89. Okay, so 4,700 was the monthly sales last year. We're increasing that by 20% straight away in January, and then following that, it'll be a 2% increase per month. So 2% will be applied to January's, and then we'll work out February's, and then we'll increase February's by 2% to find March. So let's look at the calculations we need to do. So just to recap here, the selling price is £89. That's what I just explained to you a moment ago. If we're going to reduce the selling price by £5 per trolley, that brings it down to £84 for 2024. Monthly sales were 4,700 units. And so for January, we're going to bump that up by 20%. So that means January's sales will be 5,640 units. February's sales will be 2% on top of that 5,640. So that'll give us 5,753 units. If we get a decimal at any point when we're working with units, whether it's in break-even, target profit, or production budgets and sales budgets, we always need to round up to the nearest whole unit. Otherwise, you're not going to quite achieve your targets. And then finally, March's sales will be based on February's units of 5,753 plus another 2% will give us 5,869. And again, you will need to round up no matter how small the decimal is. Okay, so the sales budget is going to look like this. Going across the top, we've got the 3 months, and then down the side, we've got sales in units, the selling price, and the sales revenue in monetary terms. So all we're going to do is pop the sales in. So that's the figures that we just calculated on the previous slide. The selling price also calculated on the previous slide, £84. Multiply one by the other, and that will give you your sales revenue. So some fairly sizable sums for sales. Production budget then. So the production budget leads on from the sales budget. Now that we've established that, the production manager has asked for your help in drawing up the production budget for the 3 months to 31st of March 2024. Now just a word here about production budgets and why we need them. If we've calculated the number of units we plan to sell, we need to make sure really that we tailor our production to make sure that demand is satisfied, but also to make sure that we don't end up overproducing and stockpiling inventory, because obviously inventory ties up cash and other resources. It needs to be stored and insured. It becomes damaged if there's too much of it lying around. So for a variety of reasons, we need to make sure that our production is quite smart. We tailor it to the number of units that we can sell. So it tells us that inventory at the 1st of January 2024 is expected to be 564 trolleys or units. 1 unit is a trolley in this case. Each month's closing inventory is to be 10% of the following month's sales. So if you need to work out the following month's sales, and your inventory is going to be 10% of that figure. Now, that's not in monetary terms, that's in terms of the number of units. So that means you're going to need to calculate April's sales units in order to find March's closing inventory. So even though we're only doing budgets for 3 months, April's sales level will inform our closing inventory at the end of March. Another caveat here is that the company is unable to store more than 590 trolleys. Therefore, closing inventory of finished goods must not exceed this number. So there's no point in making more trolleys then we're going to end up with more than 590 in stock. We need to reduce our production to make sure that we don't have more than 590 trolleys, because there's nowhere to store them. Therefore, the chances are they'll just be left lying around, could become damaged or stolen. So what we're required to do is prepare the production budget for the period 1st of January 2024 through to the 31st of March 2024. Okay, now the thing about the production budget, unlike the others, is that it's just in units. There is no monetary amount attached to any of this at the moment. The reason for that is we just want to find out how many units we're going to produce, and from that we can go on and work out the purchases budget and also the labour budget. So if we know how much raw material goes into each unit, we can start working out how many kilograms or meters or tons or whatever of raw material we need to buy. And it's the same with labour. If we know how much labour time it takes to produce a unit, we can work out how many hours we need, how much that's going to cost us, how many staff that equates to, and we can start planning. So this is all about planning. Budgeting is all about planning, preparing the figures in advance, and then taking some action if you need to. So if you haven't got enough staff, or you've got too many staff, or you need to expand your inventory because 590, in this case, the maximum storage capacity just isn't going to be enough, then we can start doing that ahead of time rather than waiting until we encounter a problem further down the line. So the production budget, again, we've got the months going across the top there, January, February and March. And then down the side, we're going to take the sales. Remember, this is in units from the sales budget, which we've just worked out. We're going to deduct the opening inventory, and we're deducting that because we've already got that in stock, so we don't want to make that again. Opening inventory is going to be the previous month's closing inventory. So I think if we look back, it told us in the previous slide that they expect the opening inventory there to be 564 trolleys. Then we're going to add the closing inventory. Now, if we've got the sales units for the following months, our closing inventory is going to be 10% of the next month's sales in units, provided that doesn't go above 590 units. Now, if 10% of next month's sales is higher than 590, we will need to reduce closing inventory. We'll need to cap it at 590 units. So sales minus the opening inventory plus whatever you work out for the closing inventory tells you the number of units you need to produce in order to satisfy your demand. So if we slot those sales figures in for January and February there, 5640 and 5753. As I said, these have just come straight from the sales budget, so if you're a bit confused where they're from, rewind the video a little bit and you should be able to see. Previous slide told us that the opening inventory was going to be 564 units. Closing inventory is 10% of next month's, rounded up to the next whole unit. So 575.3 is rounded up to 576 units, and we're adding that because we need to make those units during January to make sure they're there as opening inventory on the 1st of February. So sales minus opening inventory plus closing gives you the number of units you need to produce. And we can then fill in February's. So the closing inventory in January becomes opening inventory in February. Closing inventory in this case is 587, 10% of March's sales figure. That tells us that we need to make a total of 5,764 units. The 587 units then become opening inventory in March. Now, if we were going to work out the closing inventory for March, we need to work out April's sales. Now, March's sales were 5,869. And if you remember, they're expected to increase by 2% every month. So that's going to give us 5,987 units in April. Times 10% means that we need closing inventory to be ideally 599 units. But let's not forget that caveat that we can only store 590 units. Therefore, the maximum inventory in March is going to be 590. So when we've taken all that into account, we'll need to produce 5,872 units. Okay, so hopefully that's given you an idea of the production budget. Remember, it's all in units. There is no monetary amount attached to any of this. So purchases budget, we're going to look at one component for the trolley, which is going to be stainless steel, fairly obvious one. It probably would have things like wheels and plastic handles. There might be a variety of components for these trolleys, but we're just going to concentrate on one, which is going to be the stainless steel. Now it tells us that each trolley requires 6 kilos of stainless steel, and that last year the company purchased 340,000 kilos at a total cost of £306,000. So we're going to be able to work out what the price per kilo was for last year. Inventory is expected to be 5,500 kilos on the 1st of January 2024. Closing inventory is to be maintained at 15% of the current month's stainless steel requirements, and a deal has been negotiated with the supplier which will see the cost per kilo fall by 10%. Okay, what we've got to do then is prepare the monthly purchases budget for the 3 months ended 31st of March 2024. Now, this is going to be based initially on the production budget. So if we know how many units we want to produce and the fact that each one takes 6 kilos of stainless steel, we'll be able to work out how much raw material we're going to get through each month. But we also need to adjust it for opening and closing inventory levels. This isn't opening and closing inventory of the trolleys, the finished goods. This is of the raw material, and it tells us there that at the start of the year they expect to have 5,500 kilos. The other thing we do with this that's a bit different from the production budget is to assign a cost to it. So we're going to have a couple of calculations to do. First of all, we've got to work out what the cost price was in 2023. So they told us they'd spent £306,000 buying 340,000 kilos. So that gives us a price of 90 pence per kilogram. So if we're going to reduce that by 10%, that means that the cost is going to go down to 81p per kilo. Okay, so that's about it really for calculations at the moment. Now the purchases budget is a bit more complicated in terms of layout. You can see here we've got the 3 months across the top, January, February and March. Now we're going to start with the production in units. That's going to be key to working out how much material we need. Then we'll work out the number of kilos of stainless steel we require. So production in units multiplied by 6 kilos per trolley. Then we're going to take off the opening inventory, so that's kilos of raw materials, add on closing inventory, which is 15% not of next month's production, but current month's kilos that we're going to use. And that will tell us how many kilos of raw material we need to purchase. And then the final stage is to work out the value of those purchases. So we're going to multiply the number of kilos by 81 pence per kilogram. So let's look at the first month then. So January, the production was planned to be 5,652 units, which means that we'll need 33,912 kilograms of stainless steel. The opening inventory was 5,500 kilos, and we want closing inventory to be 15% of that 33,912, which is 5,087 kilos. So that means that if we start with the 33,912 minus the 5,500 plus the 5,087, we need to buy 33,499 kilograms of steel in January at a price of 81p per kilo. So that's going to be a total cost of 27,134. Okay, now we're going to do exactly the same in February. We're going to remember that the closing inventory is going to become opening inventory. There were no constraints with this one. We weren't told that they had a maximum amount that they could store, so we don't have to worry about that. But in February, production is 5,764. That means we need 34,584 kilos of raw material. We had 5,087 kilos brought forward from January, and we're going to need 5,188 at the end. That's 15% of that 34,584. So we need to buy 34,685 kilos, and that will give us a purchase value of 28,095. So basically what we're buying here is the number of kilos that we need to satisfy production, and then we're allowing for either the increase or decrease in inventory. In this case, it's an increase from the start to the finish. So we're going to need to buy 34,685. And as I said, it's a price of 81p. Gives us 28,095, and that figure may well feature in a cash budget, so you might have to work something similar to this out in order to get numbers for a cash budget. March, exactly the same as we did for the other months. We've got 5,872 units, that's come from the production budget. That's going to need 35,232 kilos, because remember it's 6 kilos per unit. We had 5,188 kilos at the start, that was our closing inventory from February. So we don't need to buy that again. That's why we're taking it off. But we want closing inventory in March to be 15% of March's material usage. So that's going to be 5,285 kilos. So we'll need to buy 35,329 kilos, and that will give us a value of 28,616. So these figures might feature in a cash budget if you're trying to work out how much it's going to cost you, although the chances are that you'll be paying this like a month or two down the line because you'll be given 30 or 60 days credit. So don't forget timing differences in there. Okay, I'm trying to think of any other uses for the purchases budget. Actually, there is one other use. What we could do is go to our supplier, because if we did this for the whole year, we could work out what our purchases are likely to be on a monthly basis, and we can go back to the supplier and see if we can negotiate any further trade discounts for bulk buying, or at least secure, put in an order to make sure that we've got those raw materials in case there's any shortages, any problems with supply. Okay, so that's the purchases budget. Next thing then is labour. And it tells us that the trolleys are produced in 3 different production departments. They go into a moulding department where it takes half an hour of labour time at £12 an hour. Polishing is 3/4 of an hour at £10 an hour. And finishing 1 hour at £11 an hour. Each employee works for 172 hours per month. And what we're required to do is to prepare separate labour budgets for January to March 2024 to show the number of hours required in each department, the total cost of labour for each month, and the number of employees required each month in each department. Okay, so quite a lot to do there. So let's have a look at how we can establish that. Again, this labour budget is going to be based on the number of units we want to produce, and then we need to take into account the number of hours in each department each one's going to take. So labour budget in hours then. Let's go straight in with that. So the layout, we've got January, February, March. We've got the production units from the production budget. These numbers should be quite familiar by now. So all we're going to do is multiply it up for each department. So in moulding, it takes half an hour, so 2,826 hours in January. Polishing, 4,239 hours because it's 3/4 of an hour, 0.75 times the 5,652. Finishing department, it takes 1 hour, so nice easy one to do there. And then we just do the same for February and for March. The next thing we can do is attach those hourly rates so we can work out how much the budget is going to cost us. So we've got the breakdown for each of the departments, so the number of hours from the previous page, and then times by the hourly rate. So £12 in moulding, £10 in polishing, and £11 in finishing. And then we can add the 3 figures together and get the total labour cost per month. That could feature, again, in a cash budget. Chances are we'll have to pay that in the month that it's incurred. There won't be any time delay with that. And then the last thing they've asked us to do is to calculate how many employees we need in each of the departments. So if we know how many hours they need and that each one of them is going to work 172 hours, we can see how many employees we're going to need. So you can see here that it's going to be 17 employees in January and February in the moulding department. That goes up to 18 employees in March, because don't forget that the demand and the production are increasing month on month. Polishing, we want 25 employees because the total was 4,239 hours. Each one's working 172 hours, so that's 25 employees. And that rises to 26 in February and March. And then the finishing department, 5,652 hours for January, divided by the 172 hours each one is working, means that we need 33 employees in the finishing department, 34 in February and 35 in March. Now, the beauty of this particular budget and doing it this way is that we can see easily how many employees we need in each department. So we could go to the HR department and ask them how many people are currently employed, how many people are trained in these departments, and then we can look ahead of time and work out whether we're going to need to recruit people, make people redundant, redeploy people. We can move them out of one department if it's overstaffed and into another. So again, this is all about planning, and then it's about taking some action if we can foresee a problem. Okay, so summary then. These are my top tips for these budgets. Always start with the sales budget. It is central to everything. Remember that the production budget is in units, and you need to make enough units to satisfy demand and leave enough in stock for the next period. The purchases and labour budgets are both based on the production budget. For purchases, you're working out how much raw material is needed to satisfy production and to leave enough in stock for the next period. And for labour, you're working out the number of hours needed to satisfy production, and you may be asked to calculate the total cost or the number of employees needed in each department. So work out the total hours for each department and divide by the number of hours each employee works. Okay, so don't forget to hit like and subscribe if you've enjoyed this video. Thanks very much for watching.